The federal government's been reluctant to go there thus far, despite a push from New South Wales. But as governments grapple with the economic recovery task ahead, a new report has called for sweeping changes to the GST rate. This analysis from PricewaterhouseCoopers suggests hiking the rate to 12.5% and extending it to fresh food, education and health would raise $40 billion a year. They believe it would enable to get rid of inefficient taxes like stamp duty and payroll tax, but there are concerns that it would unfairly target low-income households. AMP Chief Economist Shane Oliver says support would be needed for those adversely affected.
Those taxes, corporate tax and personal income tax, are very distortionary. They adversely affect economic activity, whereas the GST has less of a negative impact. So in theory, and this is the economic preferred model, we should be relying more on the GST and less on income tax, less on personal tax, and certainly not on stamp duty. So it makes sense to raise the GST, compensate those who are adversely affected, such as self-funded retirees, pensioners and so on, and then lower the burden on income tax.
And Eliza, the Coalition is contemplating new ways to protect Australians' personal information from foreign governments.
Yeah, Pete, the Government Services Minister Stuart Robert will give a speech to the National Press Club today, flagging the need to protect Australians' data from overseas governments and companies. It comes after an American company was controversially awarded the contract to host data from the recent COVID Safe app. So Stuart Robert will say that we need to ensure Australians can trust that government will appropriately manage the information they provide to us, whether it is for a tracing app or for the census. So he'll announce that Australia is looking into whether certain sets of data should only be hosted in Australia, creating a sovereign cloud of sorts for our data.